Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Let's talk about the Vietnam Dong, because there's something definitely happening with it. Before I get started though, do me a favor, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. If you're thinking about buying gold and silver, go to our friends over at Money Metals Exchange. The link is down below in the description. If you're a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you'll get a free half ounce of silver. Plus, it helps out the channel. Thank you. Also, want to encourage everybody to go see the uncensored interview with me, Doc, and Rice. I will leave the link down below so you guys can go check it out. Yeah, excuse all the cursing, all right? But it's a great interview. So here we go. This is recent. It says Vietnam Central Bank widens currency trading ban amid slump. So what does this mean? Vietnam Central Bank widened the dong's trading ban, signaling authorities are willing to tolerate more weakness in the currency. I told you that they're using the US dollar to weaken currencies around the world as much as possible before the US dollar crashes itself. So the State Bank of Vietnam widened the dong's daily trade range to 5% on either side of the fixing rate from 3%. It increased by 2%. So I know people got to go, Pimpy, what does this mean with the exchange rate? Well, you can see right here. The only time they'll change the rate is if it goes above the 3%. Now they widen it to 5%. So the exchange rate is exactly where they want it to be according to the globalists. But don't give up hope. As I stated before, as the US dollar continues to fall, eventually people will unpeg themselves from the US dollar. We will see currencies on a much more even playing field. It said effective Monday. It said in a statement on the website on the same day, the dong dropped as much as 0.8% to 24,310 per dollar. So for $1, you could buy 24,310 Vietnam dong. You want to be a millionaire with dongs? There you go. Head on over to Vietnam. The cost of living is really inexpensive. You'd be surprised what $100,000 worth of Vietnam dong will buy you overseas. You can live like a king. But anyways, this went on to set a new record low. This is a signal to the market that it's tolerating more foreign exchange weakness and volatility, said Nugent, a senior economist at Natexis SA in Hong Kong. It suggests the central bank is less willing to use reserves to defend the dong. Remember I told you to use foreign asset reserves or foreign currencies to defend currencies, and they're saying, nah, we don't need to do that. The US dollar's relentless climb higher is forcing central banks to step up interventions with emerging nations at risk of exhausting their dollar reserves too soon. It's already happening. As I stated, they're going to use the US dollar to crash all the currencies. Most all countries are using up all of their foreign currency reserves. We know that's not the case with Iraq, though. Vietnam's decision underscores the path that some nations may take to conserve their firepower, in contrast to others like China, which is keeping a tight leash on the yuan. The adjustment was made in order to proactively cope with unpredictable developments in the international market and monetary policy tightening by global central banks. SBV said the move came 3 weeks after the monetary authorities surprised with a 100% basis point interest rate hike. So everybody should keep an eye on the central banks everywhere. They're trying to do their best to help this agenda move along, but I don't think the agenda is ready, and things are happening way too fast for them to deal with this. And because of it, that means their whole entire plan is going to backfire. Vietnam's foreign reserves held near a record $109.6 billion in February of this year. According to the International Monetary Fund, the nation doesn't regularly release reserves data. Now, we're excited about Iraq being at 90 billion. Look at Vietnam's at 109. The central bank also said it will closely monitor market developments, coordinate monetary policy tools, and be ready to sell foreign currencies to stabilize the market. It set the dong reference rate at a record low of 23,586 Vietnam dong for every $1 on Monday. The dong has room to weaken further, down to $24,700 per dollar, the Texas said. So, like most currencies around the world, they are growing weaker and weaker to the US dollar. Their currencies are crashing. There are a handful of currencies so far that are resilient. The Iraqi dinar is one of them. So Vietnam changing that range for trade between 3 to 5% is a big step in helping them maintain the value of its currency. It does have the reserves necessary, but it's trying to avoid it, like other countries, which is trying to avoid using its foreign currency assets, unlike other countries who have been depleted, meaning their currencies are not worth squat because they have nothing to protect it. It's easily manipulated. So I said it before and I'll say it again. The United States dollar is being used as a weapon to crush currencies all around the world. But so far, Vietnam seems to be standing its ground along with the Iraqi dinar. Anyways, that's it for now. Let me know what you guys think. I look forward to your comment down below, and I will catch you later. I'm out.